In this video, I'm going to be going over the NAS100, US30, and SPX500. This is going to be an indices report or weekly check-in on, again, major US indices primarily, and overall markets as well. So let's go ahead and jump in. First thing I want to talk about is the Nasdaq 100. Now, this is, of course, a very popular asset to trade. This is primarily made up of tech stocks, and we've recently seen a really good run on several of the indices, but the Nasdaq has really had a strong lead in that regard. Again, if we take a look at the NAS100 versus here's the Dow Jones, the US30, or even the S&P 500, the S&P 500 is probably in second place, but first place is definitely taken by this Nasdaq push that we've seen recently. So I want to talk a little bit about this and give you guys my take going into the next week. So during this week, I really wanted to be long on this, and unfortunately, I didn't have a trade on. I was looking for, after this big break right here, I was looking for a pullback, and that pretty much sums up what I'm going to be looking for going into this week, where what we can see here is that if I'm highlighting some key levels of resistance that we saw right here, this level ended up breaking to the upside pretty strong here last week, and now has not since pulled back into this zone. I think we're probably due for a bit of a deeper retracement into those areas, and that's going to be where I'm looking for a possible entry going into this week. So again, we'll mark these as demand zones in green because they are key levels of broken resistance where, especially on this candle here, we saw a massive impulsive move to the upside as the stock market sentiment seems to be, for the time being, bullish. Now, if you're familiar with my trading style, you know that I am not somebody who likes to predict the future. I try to do as little of that as I can in my trading, as I find prediction to be a really tough thing to do, and especially when you try and get perfectly technical with it or anything like that. You know, I find that to be quite difficult. So instead, what I like to do is I like to just go with the flow. Right now, the trend to the upside is pretty strong. Yes, there's people who are all fearful that, hey, you know, recession's coming and things are going to get much worse. And yes, that may occur. And if that happens, we'll adjust accordingly. But for now, sentiment is more positive. Now, it doesn't necessarily mean that it's like, oh, all sunshine and rainbows from here. It just means that for now, sentiment is to the upside. The market is momentumous to the upside. And I'm looking for that pullback. So what we've got here is I've drawn a fib from the swing low, the low that we made on the 31st, all the way up to the previous high that we put in this week. So here is, again, Thursday's high, Thursday, February 2nd. We put in this nice fresh high at 12,900 just about, and price is off of those highs since then with the Federal Reserve meeting, from Jerome Powell. We saw a lot of push to the upside, a little bit of a dovish tone there in terms of interest rates and forward projections. And so now as price starts to come off those highs, I'm looking for a chance to get involved. And again, we come back to this key level at 12,200. If price is able to make its way down into 12,200 going into this week, that's going to be my area where I'm looking for a continuation push to the upside on the Nasdaq 100. So I really like this thing long, but I'm trying desperately here to stay pretty patient because unfortunately I did not catch a lot of this move. So I'm waiting for my chance, if I get it, to pull back. Now, a lot of times what people will say, Nick, they'll say, well, why don't you just take shorts in the meantime? Why don't you sell this thing back down to this if you think that it's overdone? I don't personally like to take that trade, though I know that there are traders out there who do like to trade that way, and I don't necessarily think that you can't make money doing that. I just find this portion, right, trading the pullback or trading the the short-term pullback, I find that to be much more difficult than just looking to pick up the pullback and go long on a continuation. So if this is your trade, hey, there may be, again, a little bit of a squeeze to the downside here for the day traders, intraday stuff, before we perhaps see the buyers come back in and push off of these lows. That would be my take on Nasdaq 100 from a overall view. Now, what I'm going to do is I'm going to filter on the Edge Finder here. For those of you guys who are familiar, we're going to the Edge Finder. This is our market scanning software, and I'm going to just go just indices here, and we can see what our overall view is looking like. And there it is, Nasdaq 100 coming in at a buy rating. So not only do we have the technical analysis here looking good for continuations, we also have the edge finder giving us a confirmation. Now, you might ask, why is this a buy and what am I looking at here? If you're newer to my channel, then let me show you this real quick. So we're going to go to indices down here. I'm going to go to NAS100, and just a real quick look at NAS100. Our software, basically what it does is it pulls in lots of different information, and this page is still under maintenance. I'll show you. This is what it's supposed to look like when it's a finished view. The NAS100 page is currently under maintenance right now, but you can see, we'll actually just do SPX because it's easier to understand. SPX also has a buy rating, and generally these indices, they tend to follow suit. They tend to be in the same camp. We saw that recent pullback down 1% on Friday, but we get an overall score of 3. And what does that mean? Well, if we tally up all the categories here, our total score comes out to 3. That 3 is bullish and bearish indicators across the board. None of these are strictly just price action technical analysis. If anything, it's a combination of mostly fundamental and sentiment analysis. So let's take a look at the S&P. And this is, again, going to be just generally stock indices right now. If we look at retail sentiment, right? Retail sentiment is currently pretty dang bearish. You can see 63% of retail positions are on the short side, whereas only 37% of retail traders are actually buying into the SPX500, according to the data that we have. Okay. Next up is going to be seasonality. The month of January, February, and March tend to be positive months. So we're going into a positive portion of the year. Historically, not guaranteed, of course, but just on average, we see a general increase in value on the SPX during this time. Okay, cool. That's bullish for this. So that's seasonality. What about trend? Well, trend is projected to continue to the upside, at least based on momentum. This could shift. This is why I said we are mostly reactive. Right now, the trend looks up. We'll have to watch to see how that develops going into this coming week. And from there, we can continue on. We take a look at GDP growth. This actually goes against us. So GDP growth has a bearish bias right now with a recent decline of 0.3%. So this is actually not great because GDP growth declining, of course, in a healthy economy, healthy stock market, we would generally want to see consumer spending up and that sort of thing. And GDP growth can be reflective of that. So when it's declining, that's not great. So that goes against us. But inflation has been on the decline. We've seen that number come down to 6.5% from those 9% highs in June. Things are looking optimistic in the inflation department, at least for now. We're seeing that cool. In unemployment, stayed low this week. We saw that continue to be bullish with unemployment numbers coming out better than expected, and we saw a pop on the dollar this week with a little bit of bullishness on the S&P as well. So that's kind of where I'm at. Overall, we get a buy rating based on the fundamentals, the sentiment, and now that we're talking about SPX 500, let's take a quick look at the S&P. And what we can see here is that, again, similar story to the Nasdaq. I'd be interested at a 61.8% retracement pullback, looking for a long-based trade. Yes, we may have a short-term pullback, but again, I am looking for that long opportunity to continue that march north. And again, not trying to predict, just following what the market is telling me right now. The market is trending up. I'm looking to be in on that trend at a proper pullback. You've also kind of got a nice little trend line here to the upside that you may want to consider on your charts. Now, if you're a bear, here's what I'm going to say. If you're a bear, look for the breakouts of these things that I'm talking about. Sometimes I'm going to get it wrong. In fact, I get it wrong relatively often. It happens to even the best of technical analysts or traders in general. We don't get this right all the time. We just have to get it right. And when we are right, we have to make it count, right? So let's say I catch this trade and we're in and this thing runs. I'm going to try and trail stops and let a winner run as much as I possibly can and try and max out that profit. Now, I mentioned the Edge Finder. If you guys want to try this tool out, we do have free trials available. There's a link down below in the description to take you to the page. And also, if you've been watching the channel for a while and you just want to grab access to it, we do have a sale available right now. It is currently 20% off if you use code YTVIP. The link for that is down below in the description. And hey, if you would rather just take a free trial, try it out for a couple days, then by all means, take the trial down below in the description. Just go to the page for the Edge Finder and there's a trial button there that you can click and get access to for free. So check that out. And again, The Edge Finder is something, just a little bit of a quick backstory. We're currently working on a video about how we've developed it so far, but it's actually, there's 3 of us primarily behind the design and software building of the tool. It's something that I've taken on this past year, and one thing that we just recently added was this really cool filter. So I didn't build this. This is completely done by Frank, who is my trading partner. And for those of you guys who are inside of the Discord, then Frank, he's one of our traders within the group. He also is placing trades. He was long in the SP500, made some good returns there, just riding that momentum this week. And within the Discord, again, we share not only the trades that we're taking, but we also share Edge Finder analysis as well. It is pretty much the basis to our trading styles. We use the Edge Finder constantly. So this new feature that we just added is called the risk on, risk off gauge. Many traders struggle with this concept, this risk on, risk off. What is that? What is the idea behind when should I be long things like the Australian dollar? When should I be long things like CAD? When should I be long things like JPY? This kind of helps you with that, because what it does is it shows you the daily, the weekly, and the monthly risk sentiment of the market. And so right now, we can kind of see that in the monthly and even weekly categories, we are nearing a risk on bias. Now, of course, on Friday, we saw a declining day for the stock market, which was sort of a risk off day, if you will. But overall, the bigger picture right now is still to the upside. And this is kind of why we are implementing this tool. It allows you to see the bigger picture, not just the day's movement, but sort of the weekly and the monthly bias. Now, there's a whole explanation. If you'd like to pause the video or contact one of our team members to ask your questions about the risk on, risk off gauge. Again, you can get a trial if you want using the link down below in the description. Chat with one of the reps. We have several people who are trained to teach people how to use the tool as well as how to access it for free. So yeah, there you go. Now, let's go back to the chart here for a second, and I'm looking at the S&P, and like I said, I like this thing long, but it's just a bit out of reach. And once we get a 61.8% retracement, 4,070, I'm going to look to take an attempt here at the long side. Now, I could be completely wrong with that, but I'm going to stop out primarily looking for probably not this low to get taken out. So this is that low specifically here is going to be the 4,035 mark on the SPX500. So if price was to come down here and break through those lows, yeah, that's going to go ahead and get out of that, get out of the way there. But if we can pull back into this zone, I'm looking for the continuation buy, and that is an interesting trade here for me going into this week. Now, I finally mentioned, or I wanted to mention that I was going to look at US30 here. So US30. Here's the thing about it. US30 is the lagging one of the 3. You saw the Dow actually do more, not nearly as well this week as the S&P 500. Still on the daily chart, pretty choppy, right? Unable to take out these highs of the December high, right? Despite having a pretty optimistic rally since October. We sort of paused and have been yet to get above that 35,000 mark. For those of you guys who are watching the Dow, if you are trading this thing off of a daily chart, I'd be very keen to see if we can actually get a push above resistance here this week. Now, again, this is a big ask. This is really asking the bulls to get strong enough to push through this high. But if that happens, that is a bullish signal all day long on stocks in the US30, right? The US30 is, of course, really big name US companies. So we're watching to see if that can happen. If that breaks to the upside, then yes, the Dow Jones continues to be on that watch list. But again, of the 3, this one is just not as interesting because of the fact that, again, price action wise, it's not trending as well. Yes, it's had some good little upward pushes, and yes, there's kind of this higher low, but why would I trade this when I could be trading SPX or NAS when it's having such a much cleaner chart and looking so much more understandable? This one looks pretty choppy, it looks indecisive, and so what I'd like to see is that break above before this one seriously takes my attention off of the other 2 that I'm really interested in. Hopefully that makes sense for you guys. That's kind of where I'm at with the indices for the week ahead. Again, if you want to see trades being taken by myself and by my team, by my trading partner Frank, and also Ivan, who is one of our head coaches here at A1 Trading, you can see all of our trades within the Discord. We do also have a free Discord, so 2 free things to leave you for. You can join the Discord for free, or you can get a free trial on the Edge Finder, and both of those are linked down below in the description. Have a great trading week ahead, guys. I hope this was helpful to you in your analysis, and we will see you back next time.